The Federal Deposit Insurance Corporation, FDIC, announced on Friday that Californian regulators have shut down Silicon Valley Bank, SVB, and appointed the agency as a receiver, in what became the largest U.S. bank failure since the 2008 financial crisis. Insured deposits from the collapsed crypto and startup-focused lender are currently held at the Deposit Insurance National Bank of Santa Clara, DANB, created by the FDIC, although it was uncertain what would happen to 89% of SVB's $175 billion uninsured deposits. U.S. tech giant Meta Platforms Incorporated announced on Monday its plans to end support for non-fungible tokens, NFTs, on Facebook and Instagram to focus on other means to support users, 10 months after allowing creators to share digital collectibles. Meta started featuring NFTs on its platforms in May 2022, when it grew significantly popular, but last year's collapse of crypto exchange FTX led to a major downturn in Bitcoin and other tokens, and the situation has been exacerbated by the recent fall of 3 U.S. banks, 2 of which were crypto-focused. Oil prices posted sharp losses to end at 2023 low on Tuesday as traders remained concerned over a potential recession after a still elevated U.S. inflation and uncertainty in the financial sector continued following the failure of SVB. The U.S. West Texas Intermediate, WTI, crude futures fell 2.2% to $73.15 per barrel, slightly rising from their intraday low of $72.69, while Brent crude futures dropped 1.8% to $79.30 per barrel, marking the first time in 5 weeks the global benchmark traded below $80. South Korean electronics major Samsung Electronics Co. Ltd. announced plans to invest 300 trillion won, or about $230 billion, in its new chip-making base through 2042 as part of a semiconductor cluster that the government said will be the world's largest facility. The company's investment largely makes up the 550 trillion won of the South Korean government's plan to strengthen the domestic chip industry, which found itself involved in the chip battle between the US and China. Troubled Swiss banking giant Credit Suisse Group AG has taken the option to borrow up to 50 billion Swiss francs or $53.7 billion from the Swiss National Bank, SNB, under 2 loan facilities to preemptively improve liquidity. The company's move came after its shares dropped as much as 30% to a new all-time low in the previous session, leading to several pauses in the stock's trading in the morning as it declined below 2 Swiss francs for the first time.